Hello and welcome to This is Property with John and Rachel. Today we have an awesome guest who's been a regular on our show, and it's great to have her back, Eliza Owen, Head of Research at Cotality. Welcome, Eliza.
Thanks so much for having me, guys. Good to be here.
Yeah, it's a pleasure. Now, we're talking about public schools and how this affects property in general. And we're probably being more specific Melbourne, Sydney, but you can apply insert here around the country, and it is more prevalent in capital cities. But before we go there, we're recording end of August, Rach. I'm forgetting what day it was, but big announcement this week by the government. Christmas has come early for first home buyers. Instead of January 1 release for 5% deposit, it's commencing October 1. I'm sure you've been busy fielding calls and inquiries and doing interviews. What's your take on it?
Yeah, absolutely. It's never a dull moment in the property market on the best of days, but this has certainly got, I think, a lot of media and the industry quite excited. So basically the first home owner grant, which had been 35 places each year, has expanded to unlimited places, unlimited income caps, and also an increase in the threshold of the price of property that qualifies for the scheme. Now, this is, of course, coming in the context of interest rate reductions and what was shifting into more of a seller's market ahead of the spring selling season. So no doubt this is going to be a boost to housing market activity. It's probably going to put upward pressure on prices up to the thresholds of the scheme. And no doubt a lot of first home buyers would be keen to take advantage of this because it would massively cut down the savings time on the big deposit hurdle of property across Australia.
Absolutely. I forgot about spring. Like, I was just that entrenched in the fact that there's so much demand around the country and low supply.
Spot on, yeah.
I don't know if I'm even buying into the whole best time to buy properties in spring anymore, because it's just like as soon as you can is almost a statement now. Would you agree?
Absolutely. I mean, the interesting thing about taking away the income caps on the first homeowner grant is that you would have a lot of relatively high income prospective first home buyers who can accumulate their 5% deposit relatively rapidly. And that's why I think a lot of economists are saying, getting quick on this, because it could have a pretty rapid impact on lifting property values to the top of the threshold of the scheme, at least in the short term. What we've seen traditionally with these low deposit schemes from the government is that they have very strong initial take-up, and then the demand and the securing of these loans does peter out. And I think that's something to keep in mind as well. Westpac put out a really interesting report suggesting that hundreds of thousands of people would be eligible for the scheme, but that doesn't mean they're eligible for a home loan, right? They still have to meet all those qualifications. So that will be one filtering aspect of it, I suppose. But ultimately, I think in the short term, we should see quite a bump in sales and price activity.
Interesting times ahead of us, especially come October 1.
Yeah.
Let's get into the show. All right, so 3 things we don't talk about at barbecues: politics, parenting and schooling. We're going to cover off on the third one today, Eliza. Tell us about the report that was issued, I think last month, July, I believe, or maybe even June, housing costs of the top public schools around the country by Cotality, which for those that don't know, Cotality changed their name, previously CoreLogic, Upper Data, who does a lot of research, probably the top research company in terms of all real estate around the country. Tell us about this report, high level.
Yeah, thank you. And nailed the new name. Thank you for spruiking the Cotality rebrand there. So probably worth going back a little bit. This all came off the back of the fact that we started doing this new kind of analysis, which was custom boundaries. So we could essentially draw a shape on a map of the housing market and analyse everything within that boundary. And we thought, you know what? that kind of means that we could draw the shape of school zones. Some school zones in Sydney in particular overlap with one another. So what we did was we created these kind of clusters of top public schools and tracked the property markets within those boundaries and looked at how houses in the same suburb but outside the catchment performed in terms of value change, price, rents. And what we found was that even though a lot of these markets inside the catchments had a price premium, they didn't necessarily outperform from a capital growth perspective. From a long-term capital growth perspective, looking at a 15-year period, we actually found in 6 out of 9 clusters that we analysed, it was actually the out-of-catchment areas that outperformed. But inside the catchments, they still performed fairly well, maintained that price premium, and generally had tighter selling conditions. So on average, shorter days on market, things like that. And if I can just add, the question that we were trying to answer was looking at specifically very popular, well-performing public school catchments. The idea was to understand, is it worth paying that price premium to be in the public school catchment to save on private school fees?
Yeah, and we even see it. I'm in the weeds every day, so we do see people actually weighing that up. I was talking to a client recently in Sydney who was looking at moving from their terrace house in Wallara out to another area, and they were really considering the private school fees that they would be paying if they got to move to that bigger home for their family. So people are really considering that on the micro as well.
Absolutely. When you look at independent school fees, they can be in the hundreds of thousands of dollars just over the secondary term, and that's just for one child, right?
Yeah.
So depending on your approach to education, you might find it more beneficial to buy into one of these good state school catchments, even where the premiums are very high. So the highest one that we found was we made this cluster around Kalara High School, Linfield Learning Village, and Willoughby Girls because there were overlaps of the actual catchments. When we compared in-catchment housing to out-of-catchment housing, the price premium was over $1 million for a house within that catchment. It was $1.3 million to be more precise. Now, part of that is because we weren't controlling for other factors. So if you look inside the catchments, it also has all the train stations, and that was another thing that was lifting up the value. So again, it kind of depends on how you value education, amenity. I think the other really important thing to note here is that while we looked at the top performing state schools outside of independent schools, outside of selective schools, when you look at overall school rankings and you start to reintroduce your independent schools and you reintroduce your selective schools, those top performing state schools that we looked at unfortunately fall right down the list in terms of their rankings. So again, there is a education indicator there that needs to be weighed up as well.
It's really divided opinions on schooling, isn't it? With parenting, and it's a slippery slope to get into a conversation with other people about, because there's just it really is what suits your environment and your child, and even within the family, one child can be very different to another child who's suited maybe to a better school. And some, as you mentioned, people put higher priority on schooling more so than others. But going back to your example of growth, how properties outside of those school zones performed inferior. Let's go to what inferior actually means. So in 15 years, the growth in the school catchments was 126% versus outside of the areas 150%. I'd still take that as a win, Eliza.
Oh, absolutely. That's right. So again, that was for the Kalara High Linfield Learning Willoughby Girls High School cluster. So yes, I think in that case, if you have a few kids that you want to put through decent schooling, that is certainly a very appealing kind of return over the long term. There were some, I guess, bigger variations. The lowest was around 80. Yeah, the lowest was around 80%. So that was in Melbourne's Princess Hill and University High cluster. In catchment, houses grew 80% over a 15-year period. Outside, it was 106%. So maybe a little bit more of a difference there. But again, there's no areas that are necessarily flatlining or showing really weak performance over that 15-year period.
And just confirming, this is for houses in general, or is it the
Correct.
whole market? Only
Yes,
houses?
we only looked at houses for this research. Yeah.
So if we went 2-bedroom unit, not relevant to this conversation.
That's right. And that's an important consideration as well. I guess it was a little bit of an assumption that we were making about families and, young families and schooling and the traditional kind of house and land model. But even looking at things like rents, we found that rents for these houses in the catchment were generally higher than outside as well. So, depending on a couple of different housing considerations, it seems that you've got to pay that premium if you want to get into the catchment areas.
Yeah, that example that you gave with 80% in catchment, could that, over the 15-year period, could that have been affected by the fact that they had already had that growth beforehand because people wanted to get into those areas earlier?
Rachel, that's a really good point. And I think it could also be because there's a premium on top of them. So what I would imagine is that there's just kind of an affordability threshold or limit that gets hit and puts a bit of a cap on the long-term growth rate. So you're quite right. In fact, it was interesting to see one of the places that outperformed was the Elizabeth Murdoch College catchment. That was one of 3 areas only that outperformed in long-term growth, and that was coming off a slightly more affordable price point. It had more room to grow. Not only that, but the school itself has been flourishing in recent years and rising through the rankings recently. So there is, I guess, a bit of a difference in the dynamic between more established schools with these good reputations versus those up-and-coming areas.
I suppose, like Rach and I are both parents, so we're in the weeds of it every day, and the big decisions of where to send our kids to school is relevant, and we're obviously talking to other parents that are doing the same thing and in the trenches. The thing that we notice is schools can change in status, maybe depending on their ownership or people moving to, not their ownership, their leadership, or people moving to the area. All of a sudden there's a great principal takes charge and brings the school into line and has a really good culture. And on the contrary, the principal leaves and is replaced, unfortunately, by someone that's inferior in culture driving, and all of a sudden the school has, I suppose, less of a appeal to it for the local people. How do you see that playing out in these situations? Because I would imagine that majority of these schools that you've analysed, or the catchment zones, are all blue chip suburbs around the country.
Yeah.
Or Melbourne,
okay.
Sydney anyway.
That's a great point. That's a really interesting point. So I did have a little bit of a look at rankings over time. Generally, a lot of these schools held their strong rankings. And I think you could argue there is a virtuous cycle where once a school starts to develop a good reputation, you get maybe relatively high-income households that start to move into those areas. And so that socioeconomic shift can also have a positive influence on the performance of the school. So that's what I mean by the virtuous cycle, is that once the reputation starts to improve, it attracts higher income families, and those higher incomes can also have an impact on the performance of the child in the school. Does that make sense?
Yeah, and I'm sure with that the teachers would be more attracted, like the better quality teachers would be attracted to that kind of school as well.
Exactly. So I think it's relatively rare for a school with a good reputation, and I totally appreciate what you're saying about management and how that influences the culture and performance of a school, but it seems to be fairly rare because of that virtuous cycle impact. And maybe you could say the same for areas where property markets in themselves are rising and areas that are gentrifying. Maybe that has an influence on the school as well. I guess ultimately, like, there is a little bit of a unfortunate trend highlighted where we should have more kind of equality in the quality of education available to people, no matter where they're buying into.
Interesting stuff. All right, so we're going to take a break, and when we come back, we're going to talk about how that might affect you in your thinking in respect to buying property in particular regions.
This is Property is brought to you by Sphere Home Loans. Sphere Home Loans is a mortgage broker that helps our listeners all around Australia. So, if you want to get into your first home sooner, looking at upgrading, an additional property, or want your current mortgage reviewed, just search Sphere Home Loans or click the link in the show notes, and their dedicated brokers will be able to help you wherever you are. If you are, however, after personal financial advice, don't get it from a podcast. If you would like help based on your own personal situation, head over to moneypodcast.com.au, click Get Help, and we'd be happy to introduce you to one of our trusted professionals. That's moneypodcast.com.au and click Get Help.
All right, so we're focusing in really on one portion of people's research when they're thinking, where do I want to live? Or maybe for investors that are listening to our show here, where do I want to invest? Do I want to be a part of this growth pattern that's evolving here within school zones? And I've always felt that buying in good school catchments have always resulted in favourable conditions from a growth perspective, provided that I'm buying the right asset. And that's why I wanted to go down that house versus maybe unit pathways. Like, it's not just a blanket, let's go and buy any type of asset in these particular catchments and the sun will keep shining.
Yeah, that's a really good point. Over the long term, we've definitely seen an outperformance in the house market relative to units. But even looking at this data, one of the findings that I was surprised by was that in catchment houses across the Cherrybrook Tech cluster. Now, Cherrybrook Tech, it's not a necessarily high-ranking school, but it's very popular because it's large and so they have good facilities. But the houses in those markets kind of underperformed a bit and actually had a cheaper price point than the out of catchment area. And it actually came back to things like the type of housing stock, the type of amenity, and the markets within markets that meant there was a bit of outperformance outside of the school catchment.
When you think about property research, which is your game, your domain, what sort of weighting would an investor put on, I suppose, school catchments? Because I'm thinking about it broadly and saying, well, is it the school that's allowing the area to grow? Is it the fact that it's NIMBYism, not in my backyard, we don't want more apartments, units? Is it the low vacancy rates? Is it the median price that's continued to be steady along the journey? Like, how much of, I suppose, a say does a school have in the area?
That's a really good question. And I would have to say, for an investor, I don't know if it is the school itself that you would be basing that decision on. I would have thought you'd sort of look more around the numbers. And of course, a lot of investors would look for something at a lower price point anyway, right? They tend to chase capital growth over time. And what we've seen more recently is that investors are kind of skewing to the lower end of the market because there is room to grow. But if you've got the money for it, I mean, I think it's just one of the added benefits. And like you say, there's a lot of confounding variables that come with that. Top school zones do tend to have lower vacancy, tighter selling conditions, decent capital growth, and a kind of blue chip element to them. So I guess it just depends on your price point and your investment strategy.
Good answer.
Yeah.
Thanks.
So more so for people that are looking for their families, there's a huge impact on schools. Do you think people are weighing up a cost point and just saying, this is how much it's going to cost me to send my children to private school and this is what I will save if I live in this catchment area?
Yeah, I think it really, again, probably depends on your attitude towards education and your how well you could afford independent schooling. So again, to use that Hills area as an example, where Cherrybrook Tech had a lower price point. The thing about that broad area is that more families send their kids to independent schools. So maybe buying into the catchment isn't as pressing a consideration because they were always going to send their kids to an independent school where you don't necessarily have to live in the catchment. And that's how I think different values around education can influence the market dynamic. Having said that, I mean, with cost of living pressures as they are, depending on the number of children you have, I've no doubt a lot of families would be trying to do what they can to get into those markets. You know, there have even been cases, unfortunately, of fraud where people have registered at an address, at a rental property, and it turns out that a single school sees multiple families registered at the same address.
Oh, no.
That's how desperate people are. And I think when I approach this research, I'm always thinking about it in terms of the societal, political context as well. That says to me that we probably need some, more reform in our public school system so that people don't have to go to those measures to get a decent education for their kids.
Yeah, that's a really interesting point. I know that's happening. It's rife where we live, and it's out of desperation, really, isn't it, to say, well, okay, I live in this zone. I don't want my kid to go to this public school. I want them to go to the one over there where their friends are going. So this is what I'm going to do to beat the system, essentially. But fundamentally, I would say, and I'm on a board of an independent school, so I get to see a bit of the data, and fundamentally there's a lack of schools anywhere in the country, wherever we look in major capitals. Like they're all bursting at the seams, and there's always wait lists on good schools. There's no doubt about that. But I think the interesting, Rach, you mentioned about, okay, I live outside a good school catchment zone and send my child to a independent school or a private school versus saying I live in the school catchment zone that I want and take advantage of the free education system. Are we looking for the price on the way in, or are we looking for the growth long term? So it really depends on which lens we're looking through.
Yeah, I would agree. What I can assume is behind a lot of that weaker capital growth trend is a bit of an affordability limit, and maybe that is slowing the ability of families to actually buy into these areas even if they want to.
I grew up in an environment where there was one primary school. The private school was 3 hours away. No one ever went to that. And the high school, we had two options and they were both half an hour away. So it was pretty clear cut for me being in regional. And I think people in the regions or in country areas listening to this are saying, well, it's really just we send our kids to the local school and that's pretty much it. But there's I find locally there's been a lot of a shift towards maybe the independent or Catholic system because the public system isn't giving them what they need. So with in respect to, I suppose, again, the weighting on schools, let's strip back a bit and say, well, okay, fundamentally low supply, high demand in majority of the good areas around the country. Is that fair to say? Every capital city, every larger regional at the moment, there's massive demand for living there because there just aren't enough houses.
Sorry, are we still talking about the school zones or just the market more generally?
Just coming back to say market more generally. The fundamentals is that's what we're seeing right now.
Yeah, so we're in a really interesting environment for 2025. I don't know if you recall at the end of last year, national home values had a slight dip. It was a peak to trough decline of a whopping 0.3%, right? We were just starting to see this combination of factors, relatively high interest rates, cost of living pressures, affordability constraints weighing on the property market. That seems to have really turned a corner in 2025, partly because household finances are improving. You've got lower interest rates, stronger real income growth, and consumer sentiment had a massive boost through August, rising almost 6% off the back of the rate cut decision. And this combination means that there's more money in the household sector, there's more positive sentiment around it being a good time to buy a dwelling, but that has all happened against sellers holding off a little bit. Like you were saying before, John, broadly supply is constrained. And I think that's because between things like Liberation Day, geopolitical tensions, there was a lot of uncertainty through the first few months of the year. And so supply levels are low to where they've been historically. In the past 4 weeks, new listings, even though they're starting to trend up, as we head into spring, they're still about 10% below their historic 5-year average. Total listings are even lower. They're roughly 20% below the historic average. So I think in the short term, we can look forward to a pretty good spring selling season for sellers. And we might see a few more listings campaigns pick up off the back of that. And like you say, this is a pretty broad-based increase that we're seeing in the market.
Yeah. Eliza, am I able to ask a question that's not related to school housing at all, just because it's such a hot topic this week? There was a report that came out that said the Labor government predicting the First Home Guarantee Scheme to only have a 0.5% impact on housing prices. And I thought that was wild, and I can't miss the opportunity to ask your opinion on that.
I feel like it would have more of an impact. I think it depends on what time frame we're looking at as well. So I think in the short term, there's going to be a lot of activity and excitement around this scheme. And I'm with you. I can't help but think that the impact on prices would be a little bit more than that. But longer term, I think maybe when people who could really afford to take advantage of the scheme have done so and that kind of peters out, we might see prices kind of stabilise off the back of that. But yeah, it's a surprisingly low figure, isn't it? And maybe it is the impact of, lots of people can qualify for the scheme, but they still have to qualify for the loan.
That's right.
Yeah, and we've spoken about this on other episodes, but the qualifying for the loan bit is relative, but sometimes the banks are lending people more than what they think they can actually afford as well. And I think the thing that they need to be careful with is what are the repayments like for the next 5 years, not the next 5 minutes sort of thing. So yeah, it's when everyone's rushing to the finish line here and there's FOMO and emotion, some people will be caught out, won't they?
Yeah, I mean, to be fair, I think broadly speaking, we have a pretty good, and when I say good, we have a pretty conservative lending environment. So people do have to go through stress tests and, a serviceability buffer of 3 percentage points, which does help to generally protect the lending market. It's why arrears rates in Australia are generally very low. Yeah. Having said that, I really hope a lot of young people who are looking at these schemes understand that the flip side of a 5% deposit is a 95% loan to valuation ratio, and that means potentially hundreds of thousands of dollars more in interest over the life of the loan. Now, funnily enough, that can still work. If you're a renter in Sydney, for example, where median rents are $800 a week, the time saved in the rental market plus the LMI savings probably outweigh the additional cost of the interest on the loan. At an individual level, it can be a very smart scheme to take advantage of. It can work. The problem is at a systematic level, it really does nothing to address why deposits are so high in the first place. And I think that's a pretty common critique of that at the end of the day, when you really break it down, this is just another demand side policy to push prices higher.
Yeah. When do you think this will end, Eliza? So there's no end date in sight for that. It starts October 1. Do you think there's an end date in mind from the government?
I think it depends on the impact that the scheme has, but I think, there could be a time where they start to pare it back a little bit in some form, in whether it's the places or the income caps. It could even just depend on, the political environment as well. But
interesting.
Yeah, well, I think we'll just have to see how the scheme plays out in the short term.
Yeah, I saw a report this morning that someone was having a dig at the scheme, saying that the children of billionaires would be able to take advantage of the scheme because of the lack of income caps. But in my experience, the children of billionaires aren't borrowing 95% for a home loan.
They're not waiting around for October 1.
And they're not looking at where there is a limit, where there is a level of selection here is the thresholds of the price cap. So it's 1.5 in Sydney, and that sounds like a lot, but 1.5 is the median house value, right? So you're not going to be buying a house in Mossman, eastern suburbs with this scheme.
Yeah. No, fair call. All right. Some hard-hitting questions that we need answers to, Eliza, before we finish.
I thought we did all those.
No, we've got more to come.
Great.
Put our investment hat on now. And which one would we choose? So there's a couple of indicators here, but then there's some locations. So if I'm an investor prioritising something, am I prioritising vacancy rates or unemployment?
Unemployment, I would say. But I feel like the two would kind of there would be a correlation there, you would think, between tight levels of employment and high levels of property demand and vacancy.
Yes.
If I had to prioritize, I guess because the vacancy rate fluctuates, but the unemployment rate is probably a good indicator of broader socioeconomic conditions across an area. That's the one that I personally would go with, is the unemployment.
Love it. If I'm renovating, is it a kitchen or a bathroom?
I have no idea. I feel like both are really important parts of the home. I can say for me personally, my bathroom is gross and I'd rather do that one personally.
Fair enough. Okay. This one is interesting, which I get all the time. A 3-bedroom home on a larger block further out, or a 2-bedroom unit closer in to the CBD?
Depends on your budget. So
same budget.
Same budget, then I would go the larger home in outer city. Okay. Just because house and land tends to perform better than units over time. Having said that, though, the small unit in inner city probably has better gross rent yield. So capital growth strategy, I'd go the house and land on the fringe.
Mm-hmm. Brisbane or Melbourne?
Ooh, again, I think kind of depends on your strategy and budget, but I would take a bet on Melbourne despite everything. It's just relatively more affordable and I think more room to grow.
Okay. Adelaide or Perth?
Adelaide. It's been an extraordinary performer in the past 5 years. Perth and Adelaide have actually performed similarly. I think there's a little more cyclical extremity in Perth. It's a little more boom and bust, if you like, and I think both are great cities, but if I had to pick one, I think I'd go with Adelaide.
That's interesting. So the whole anyone who's researched Perth has seen the boom bust type fluctuations over time. Do you think it's as intense as it used to be?
I would just say that it's had an 80% uplift in value over the past 5 years.
Yeah.
And that's pretty extreme. And it is more tied to the resources sector than Adelaide. So volatility in commodities could have more of an effect on that market. Adelaide is a little more accessible. It's not as isolated as Perth. Like I say, I think they're both great cities and they've definitely been through this nice virtuous cycle uplift from economic and population growth. But if I had to pick one, I think it would be Adelaide.
Love it. Okay, no, we just threw them in. We didn't prepare Eliza for those, so
Yeah, the kitchen bathroom one. I'm gonna have to check in for what people say on that one. That's fascinating. I didn't realize that one was better than the other to do.
Well, again, this is just people that I'm talking to on a daily basis, and they're like, okay, which one do I do first, the kitchen or the bathroom? Maybe from a cash flow perspective, it's what's going to get the best rent, but also then capital growth. And I'm saying, well, toss a coin, because it's probably one that's the most in need of some love.
Yes, and also maybe there's something of like not everyone cares that much about cooking, but everyone needs a bathroom.
Yes.
So maybe you go to the bathroom.
You see, I have a bias because I'm a cook.
Yeah,
so I always say kitchen, but it's my bias.
I love to cook
Investors
as well.
can't think that way.
I would love both a nice kitchen and a nice bathroom.
The 900 mil over the 600 and those stainless steel appliances. Yeah, I love it. Okay, Eliza, that's been awesome. It's a really, I suppose, topical conversation around barbecues and water coolers and everything is where am I sending my kid, and how should I go about this, and how do I approach this? And my feeling, and I'll get yours in a moment, Rach, is there's no one size fits all. Every parent's different, every family's different, every child's different, and it's just got to suit your situation. So the other thing that we didn't really talk about was people sending kids to certain schools for association, and I think that can be understated as well when we're making key decisions. So, Rach, what do you think? Any final messages?
Oh, look,
thoughts?
I just think it's such an individual choice with schools, and you're right, it's not the conversation sometimes you bring up at the barbecue just because it is, people have strong opinions about it. But I am seeing it on the day-to-day where people are using that or having that as a factor in their decision-making of how much mortgage they're actually comfortable with. So thank you so much for sharing all of those insights, because I think it's really interesting to hear.
Thank you so much for bringing me on and having the opportunity to talk about this research. Unfortunately, like we were saying, it's kind of carefully curated areas and a little bit limited, but maybe in the future we'll be able to scale this to other states and regions.
Yeah, and I think for investors or homeowners or pending homeowners around the country, if it's not Melbourne, Sydney, and it's somewhere else, regional or other cap city, you can look at this and say, well, what does it cost me to buy a property in a school catchment zone versus one outside? And you can actually do your own research quite simply, can't you? And come up with some thoughts on what's going to be best for you. And not every decision, surprisingly, Rach, is based on how much money we're going to make.
It's not.
No. So, all right. Well, thanks for joining us, Eliza, and everyone else. Thank you for allowing us into your ears today. If anyone wants finance, hit Rach and the team at Sphere Home Loans up. If anyone wants a property and wants someone else to do it for you, then Envisage Buyers Agent Service can assist with that as well. Eliza, thanks again.
Thank you.
Any information given in this podcast is for entertainment purposes only, and you should seek your own property advice before acting on anything you may hear in this podcast. If you want to start or advance your property education journey, John Pidgeon's book, Sort Your Property Out and Build Your Future, is available where all good books are sold, or via the link in the podcast show notes. Opinions or comments from any guests on the podcast are theirs and not those of the hosts, the publisher, or their respective license holders.